Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Market Analysis. Got a little bit of a late start today. We were chit-chatting, and I looked down. I was like, "Oh God, it's two minutes after." It's always fun when that starts. Again, time flies when you're having fun, and Todd and I were doing some catch-up. So
I'll take
um,
that on me, by the way.
he's claiming responsibility.
Everyone, it's my fault.
I was trying to be nice. I was like, "Oh, geez, no, it's no big deal." Like I said, we'll go ahead and get started, and we'll just dive right in today. For those of you that are back again, I appreciate you guys coming back out. For those either new, welcome. It is June 1st, so it's kind of crazy the way that this year is unfolding. It's we're not. Doesn't feel like we're halfway there yet, but I mean we're summertime. Kids are going to be out of school soon. For me on a personal note, now we are 21 weeks, so we are over halfway. So I know the year's almost halfway, but pregnancy-wise, we are over halfway. We got the little one coming in October, so pretty excited about that. Lots of stuff going on. There was all kinds of news releases today. There's all type of comments today. There was OPEC meetings today. So unlike last week where we really didn't have tons to talk about, there's a lot going on this week. And again, it's the beginning of the month, and that obviously always helps. All right. So before we begin, let's kind of jump in. If you are new here, oops, it helps when I'm on the right menu. There we go. For those of you that don't know me, I'm the president and CEO of Keep Trading Simple. I've been working with Nadex now for about, I want to say 4 years. I've done articles for them. I've done education seminars and summits for them. I do these morning broadcasts, or I do morning broadcasts, and as well as I do these weekly analysis sessions for them. And my goal of these sessions is to, again, I can't teach you guys the end-all be-alls for everything you need to know Nadex-wise, but each week I want you to take something new from these sessions. Whether it be trying something new in demo or a specific level out there. But I want to make sure that it is beneficial for your time. And again, I appreciate you spending it with me. So I've been trading since about 2000, so I've kind of seen the ups, left, right, sideways. I've traded multiple different asset classes. Started the traditional way with stocks and traditional options. I'm not a 12th generation trader, so I can't say, oh, trading's been in my blood. No, it was me. I'd always been drawn towards the markets. I loved it. I couldn't get enough information about it. And again, in 1999, the internet was not quite where it was. Like YouTube was not really what it was today. So I would go to a lot of local, seminars and things like that to kind of learn and really kind of learn all the wrong way to do things. So the strategy that I use is a little bit different than what most people have. My charts look a little bit different. I'm a price action trader. I'm sure that's kind of the hot button. Everybody's a price action trader now. And then it's funny when you say that and then they throw 12 indicators on there. It's like, no, you're a technical trader, not a price action trader. A little bit different. I'm looking at candlestick formations, looking for previous buyers and sellers, right? I'm a supply and demand trader. I've created a number of different strategies that you can use with Nadex or actually elsewhere. The ones that have been coming kind of in the most, and I would say probably the most popular, is probably the 5-minute binary course. People love that one, but the main course that I typically deal with is the supply and demand course, and it works for Nadex very, very well, and it kind of carries over. The high volatility trading course was something that came out last year. Obviously, with COVID, there was crazy amounts of movement, but if you like news trading, that's also one out there that really is beneficial. And again, I absolutely love Nadex. We're going to talk about some of the levels today that kind of fold right into that. I did spend a little bit of time inside of one of the big 3 banks. I learned everything that I thought that industry, that financial advising industry was about. I was wrong. It was the exact opposite. I didn't stay long, and I came back out, and I've been, basically teaching ever since. I love educating people on it. So if you guys have questions, feel free to ask them. I'm more than willing to answer them. Obviously, if it requires more than, 1 or 2 emails, typically, it's one of those things that I try to wrap it up as fast as possible, but my email is absolutely open. We can kind of go back and forth and deal with that. All right. If it is a Nadex specific question, though, definitely send it to them. Not that I can't answer it, but they're Nadex support people that can help walk you through things. And as I said, I'm pretty busy, so I don't have a ton of time with that kind of stuff. But I'm sure you guys know how to get in touch with them if you need to. Before we begin and look at charts, I do have to cover a Nadex risk disclaimer. The trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. You would think I had that memorized, and I almost do, but it's not quite there. Each week I kind of add a word here or there. It's kind of funny when I start thinking about it. So here's our agenda for today. We're going to take about an hour. Take about an hour of your time. We're going to cover the upcoming news events. As I just mentioned, I absolutely love news trading. Last week was a little bit rough because there wasn't many news releases out there. Why I like news so much is it because it acts as a catalyst. Catalysts are basically the things that make the market move faster, right? Could we do the exact same style of trading with no news? Yeah, but it just takes a little bit longer, and you got to look at different things. Like I said, I prefer the fast and the furious, and again, a lot of that focuses around news. Okay, so we'll look at the upcoming news events for the best trading opportunity. Actually, this evening at 9:30 p.m. is one of my kind of quote trade of the weeks. One of the ones I love to look at the most. And again, I'll show you that in a sec. Then we'll go over and we'll look at indices. If you attended our session this morning, one of the pairs that we talked about, or one of the assets we talked about, was the Dow. Okay. Somebody was listening to that. I mentioned that there would be some profit taking coming in. Don't know if you guys saw it. Mentioned that there would be a knockout that most likely wouldn't survive the open, and it didn't. But if you had found a call spread in there, it did quite well. It was a reversal pretty much exactly in the level that we talked about. And I'll show you kind of where the rest of the levels I kind of see are for the rest of the week for that. Then we'll cover Forex. There's been a lot of movement in Forex lately. A lot of retracement. So it's been one of those things that it's not necessarily the best swing trading asset right now, but again, is Nadex really designed for swing trading, or is it more designed for day trading? And I have to say it's the day trading side. So Forex has been quite a cool place to play with Nadex lately. And last but not least, commodities. All right, commodities basically meaning gold, oil, and silver. We talked about silver this morning and about how there'd be profit taking. There was so much movement in the overnight, and it did. It's gone straight back down again. Hopefully, somebody was able to grab that. I know silver is not something that everybody trades. It's kind of like the I don't know, the third wheel, right? Gold and oil, everybody loves, and then there's silver. There's also natural gas. I know last week we mentioned natural gas in the morning session, and it did really great for the oil or the natural gas release on Thursday. But again, one last thing before I forget too, as far as commodities go, don't forget that this week the oil inventory report will not be on Wednesday because of the holiday. It will be on Thursday. So that's one of those things that you kind of got to adjust for. And it's always those ones that like kind of you're like, oh, is it good? Is it not good? You always got to make sure you watch it. All right, so with that said, let's go over and let's dive right into charts. Let me go ahead and pull the chart window up, and we will start with news for the week. Now today, we had a lot of early morning news. We had some amazing data out of Germany. We had some great data out of the UK. CAD GDP month over month came in a little bit better than expected. And again, we already know that the Canadian economy is moving in the right direction quick. ISM manufacturing came in higher than expected. And again, we're seeing this across the board. And although the Fed just keeps saying, yeah, we see inflation, but it's transitory, it's no big deal, we continue to see it get more expensive and more expensive and more expensive. And if you don't know what I mean by expensive, go out and look at gas prices and see what your gasoline is. In my area, I have one place, it just happens to be Sam's Club, one place in kind of my surrounding area that has gas that is less than $3 a gallon. I don't know where you guys are or what it is where you are, but like I said, it's like, oh God, it's $3 already. What's next? $4 by July? I mean, who knows, right? But again, seeing these ISM numbers, inflation starting to gain again, they're gonna have to mention it. We had some speeches, coming out of the pound, out of the UK at 11. 2 p.m. we have an FOMC member speaking. It's not necessarily one of the biggest movers, but again, end of day, they can spark something. Tonight, GDP quarter over quarter. I think this is an important figure. Now, Australia had a little bit of a hiccup. They just had to lock down Victoria for 7 days. They had like 12 cases of COVID, which put them above the acceptable rate for them. So they did a little bit of a lockdown, and it was a strain they were being very strange about. They said it was a highly contagious strain, but they didn't say which one, which is always kind of a little bit weird. It's like, why don't you tell us which one is the bad one? And they didn't. They just kind of rolled through it. But tonight, 9:30 p.m., I think this is an excellent opportunity. We've had a day of the U.S. market being online. I think this is a great one, right? Minus that 1 week, everything's been kicking pretty good out of at Australia. That time at night, 9:30, there's not a lot of volume out there, so the moves tend to be pretty good. You are able to trade that with shorter duration contracts, and again, keep those strike widths smaller, so you don't need as much movement at night, right? So again, we'll see how it kind of boils out. It's 9 hours away right now, so there's not too much we can do. We'll look at the analysis and kind of see, again, if this then that type trading. Kind of hard to look at the contracts because remember at 5 p.m. Eastern, Nadex closes down, the new contracts get rewritten, and those would actually be the contracts that we are looking at for that news release. But I like that one a lot. I'm definitely looking forward to that one later on this evening. Tomorrow, okay? Tomorrow, normally Wednesday is a great day to trade, but this week, because of the holiday, not as much out there. Tomorrow, there is retail sales. Now, again, retail sales is also another big Australian figure. We'll see. I have a feeling there'll be some other headlines that pop up on Wednesday. It looks like it's pretty, anemic right now, but I do believe that there will be some other opportunities, particularly in the European session, and we'll see how that one goes. But again, retail sales is always a great number tomorrow night as well. Wednesday is the biggie as far as a lot of different news. We have the employment change data, again, expected to be not as good as before, but still pretty positive, right? We have the unemployment claims number. Again, the forecast is coming at 400,000, so definitely less than expected before. And all I hear about, on my son's team, a lot of the parents have small businesses. Like 3 or 4 of my parents own restaurants, and they said we can't hire people. We just can't find them. We're trying to get people back. So I expect this unemployment claim number to also continue to creep going lower. Now, Thursday we have ISM services. Now, services is what was really hit the hardest. Manufacturing has been kind of rolling a bit, but services is also starting to kick back up again, and I think that's important to kind of keep an eye on for Thursday. I think that could be a big one. And again, it's kind of like there's one good number at 8:30, and then the 10 o'clock could be bad, and then crude oil comes in. So it could literally be a ping pong match on Thursday morning. So I think should be pretty interesting as far as trading opportunity goes. And then at 11 o'clock, we have the crude oil inventory report. It's expected to be minus 1.0 million barrels in inventory. I think this is interesting because, again, have to see what the API number is. But the reason why I think it's going to be an interesting number is because, again, we're starting to get into that kind of holiday weekend. What's going to happen? What's the data look like? Did more people travel? Less people travel? Did people leave early? How did they get there? Again, I think it's a little bit harder of a week to forecast, right? Now, again, they've been doing it forever, right? But I do think there's a little bit more opportunity this week for a miss. And again, don't forget, natural gas will also be on Thursday. And then Bailey speaking at noon. All right, now that caps us off for Thursday. Going into Friday. Friday, we got some big speeches, right? 7 a.m., we have Fed Chair Powell speaking, as well as the ECB president. So that kind of opens us up at 7 o'clock in the morning to kind of a retracement from the European Open, right? Or maybe even kind of, if it brings it down to a level, kind of a launching point, right, for both those currencies. Powell, I don't know. I mean, if the numbers this week, I just feel like Powell has to mention something about inflation. I mean, they keep talking about it's transitory, but again, he's participating in this, this panel, right? Central banks and climate change. How to manage expectation balances, et cetera, et cetera. Now, we talked about this last week, and it's funny, it's more hawkish. Well, we mentioned an article they brought out last week about Powell, about how the central bank used to worry about employment and inflation, and that was their mandates, and that's what they were focused on. And now, now the central bank is doing things like climate change. Okay, they are taking on more political size kind of bites of things. And the question is, are they no longer kind of an independent body? Are they swayed by political forces now? So this is one of those ones that, although it's kind of interesting, I wish it wasn't a climate change. I wish it was global recovery, or maybe the digital currency implementation or something along those lines. I wish the Fed would stay to what their actual mandate is, because at this point I feel like the more that they kind of meddle over, the more they're just going to get absorbed into the government, and this is just going to be another government arm instead of an independent body. Now, 8:30 on Friday, obviously, first Friday of the month, we have the non-farm employment change. Now, that's a biggie. That's considered one of the biggest market movers out there. The unemployment rate, look at this. The unemployment rate is supposed to get back down to 5.9. We also have the Canadian data. So it kind of sets us up for an interesting situation between the dollar and the Canadian. Their unemployment rate is actually supposed to tick up. So people are expecting Canadian weakness going into Friday, and we're seeing a lot of dollar strength. And that's how the market's going to prepare for it. But with that weak Canadian data and the strong US data, the market will prepare for that. Could that potentially lead into a good trading opportunity if either of those two disappoint or miss the forecast? Yeah, absolutely. Right. So there may be some, maybe a very kind of interesting play in that one. Particularly and looking at it right now, I mean, these forecasts can change. But look, the unemployment rate is supposed to go up, but the employment change, although negative, is way, way down versus what it was last time. So again, it's kind of one of those ones like, well, that should be positive if they're only losing a little bit of jobs, right? I mean, how do you lose only 23,000 jobs and get a percentage point? But we can't fill, So I think there could be some disappointment on Friday. And when I say disappointment, not necessarily in a bad way, I'm just saying disappointment is in the forecast was not reached. It was either greater or less than by a statistically significant amount to make this a market mover. And then the IV PMI for CAD, and again, supposed to be higher. It's kind of hard to say, hey, listen, PMI is going up, right? That's good. That means your economy's working, right? Inflation, but yet you're supposedly this is going up. No, that's not how it works, right? Typically, this is not negative in a negative number, and this is not a positive number. That's not how those two things work. Okay, so we'll see. So, like I said, a lot of opportunity this week, 10 times as much as what we had last week. I think those are, it's always nice, but again, that's first week trading. Okay. Please, okay, just making sure. But wow, Lindsay says that gas prices in Los Angeles, and I guess the same in Chicago, I'm complaining about $3. She's saying $3.50 to over $4. That is crazy already, and we just started the summer. We're just getting the summer gas prices, right? So yeah, $4 gas. Here we go. I believe this is Elon. Get in there and be like, hey, we need more electric cars. I don't know. We're going to get the power for all the electric cars, but that again, electric cars are going to try to drive us that direction. it's just nuts. All right, so let's go into the charts. Let's look at the ES first. So if you remember last week, we kind of had this as a target. We were looking for 42.24. Right here yesterday, we kind of, about this time yesterday, actually, we kind of had a bottom, and it was a basing area. And again, volume on Monday, holiday Monday is typically very, very low. You may say, well, wait, it wasn't the market close? Yeah, this is the futures market. I mean, it obviously moves around. It doesn't, it's not just like regular markets, right? But for the most part, being a holiday, it kind of took off. And again, we finally got up to that 42.24. It hit it and immediately dropped right back down again. So, we were kind of looking for that opportunity. We'd had a lot of basing in here. And I still think that level is one to watch out for. If we look to the left and kind of see where that number actually came from, you can see that was this area right here. We kind of had a bit of a turn, and we were starting to go, and then we accelerated very, very fast to the downside. So anything above 42.24 this week, there's definitely areas up here. And again, seller stepped in here, seller stepped in here, sellers kind of stepped in this area as well. So there's a lot of congestion for this one to go higher, particularly with the data that we've seen. Now it's kind of again, we're in the upper reaches of, again, what you see is this pink area, right? And the question is, how far could we actually drop? Now, I would say that it's important to kind of keep your eye on, and again, this is holiday Monday at noon. Do we put a lot of, credence into it? It's kind of like, kinda, but not really. You can look at the level down here at 41.80, right? About 22 points from where we are right now. Now I'm going to just steal this because again, this was that launch point that we talked about. Here was the actual trade. If I take this level here and we bring it down to this level of basing, we can see that although there's not really a telltale sign we have buyers, we have 1 touch, 2 touches, 3 touches, and kind of a bounce off of it. This area is probably not going to be a big holder. And you can see that the next real area we have was all the way down here. And this was a level that we were actually looking to take a short off of. Why? Because of this big push in price. So although there are some levels in here, and you can say that, hey, listen, there's buyers here, buyers here, buyers here, buyers here. I would say that, this is basically middle of the night trading. We have around 8 p.m. till about really, European session kind of, I guess, about 6 o'clock in the morning here, 6:30. So this is a much stronger kind of open. There was a bit of a gap there. I would say right now this is looking more negative, and we do have to get through this one little sticking point here at 41.90. But right now, based off of what we're seeing on a technical level, the force that it turned off, it pushed down, came back up, and immediately started to push back down again, meaning we have some sellers above. I would say right now today, it looks like this one wants to stay in the red and continue to push lower. The big question will be is, do we kind of mess with this level here? And again, I'm going to change this to yellow as kind of an alert level. could it travel? Could we put a short in here at 41.77? 41.77, or actually, I'm sorry. Yeah, 41.77. 41.77 is an old level. We have used it in the past. It has pushed here a few times. Typically, we like to see things kind of push through levels and have a clear run. Like the reason why I like this drop below 41.42 is because there's nothing here. There was no pullbacks, no corrections. It was just a straight up move. So again, this one technically can move all the way back down here into the 40.90 range. We don't quite have the same scenario here, but I think it's a very important level to keep track of. Now as well, we want to definitely mark off the top of this and say, hey, listen, we had strong movement price. This was at the U.S. Open for the day. It literally opened and got hammered straight to the downside. It's a level that we need to watch out for. So, depending if we can get a nice bounce, again, I'll keep this on the radar. And again, we may be willing to take another short, depending on the time of day that we hit that level. But right now, again, I would say if you're looking for some type of a continuation trade, there may be something, and again, I say may because it really depends on the time of day we hit and what's going on. But I would say 41.77 is something to kind of keep in your kind of, side view mirror, right? If we can push all the way down, and again, it does look like it wants to attempt to push there, all right? And the way to play this, again, play one of those Harry Potter, those momentum, continuation trades, see if we can break through the bottom. And again, overall targets, though, would be sitting approximately here, 41, 49, right? You know what? Let me change it. I forgot. You guys can't see the black well right there. Yeah, I think that's better. All right. Let's go to NQ. So NQ basically did the same thing. We had been on a level here, and again, it got broke. We were talking about the next time it comes through, and again, it broke through. Wasn't anything spectacular. That was, Friday, right? And then this morning, we literally got up to it about 5 o'clock in the morning, held, and boom, collapsed at the open. It was a harder level to take. Again, we were really looking for this to come down. We really wanted this type of explosion by coming lower. And I think it's important to keep this on your radar, especially because, again, we bounced here. So this is important to know that we had buyer step in, buyer stepped in, buyer stepped in, although it did go deeper. The next time that pushes through, it shouldn't have an issue getting lower. So, there's a potential short there as well. But I think anything at 1350, 13,507, right? Coming back up to 13,609, I think is where we take off. And just like this is set down here as well. Let's see. Take this one there. We had it there. I'm going to move this open for the European Open. There and right there. So the reason those two have been moved over because of the kind of the same thinking, right? If we're able to continue to push down today, and we can be there either of these two levels for both the European Open, right, or the U.S. Open tomorrow, those could both be launching points higher, right? Now, we do know that tomorrow, right, tomorrow is the 2nd, there is not a lot of news, and a lot of times no news is good news, right? So that could be a possible area for this as far as a reversal. But right now, I would say I'm also kind of negative thinking on this one. I do think it will come back down again. And if you wanted to drop this down to a 15-minute, let's see, is there a level? Nah, there's not really. I mean, there's a small little level right here that we just kind of hit, and it's attempting to go through back to the downside, right? But unfortunately, this is not really a level that we create a Harry Potter. So I would say, more bearish minded on this one more than anything else. And again, it is the pink level. Now, YM. Okay, here's the Dow position that we talked about. I mentioned sometime this week we are within one daily ATR. We got to get to 35,000. It's there. It's like within striking distance. Every time I forget which one it is. The what's the Greek myth? The guy with the fet that had the wings, but they were made out of wax, and when he tried to fly too close to the sun, the wax melted. It's I feel like that's what this is, right?
Icarus.
Who is it?
Icarus.
Icarus. Yes, I feel like this is like an Icarus situation, right? Here was the UK Open. We went straight up. Here was our session this morning, and I mentioned, hey, listen, there's a level here. It's a small 30-minute level. I mentioned that, one of the ways that you could have played this is, actually, I'm sorry, that was oil, but mentioned kind of the same thing, right? It's a longer duration. We're right at the open. There's going to be profit taking stepping in, right? And as soon as the U.S. trader stepped online, remember, yesterday was a low volume day, and from here yesterday up, low volume. Here's the big money stepping back into the market. He immediately hammered it back to the downside. We've almost completely retraced from the European Open. And again, ways that you could have played this, we mentioned this before. We talked about it in the Golden Oil Education Summit we had a few weeks ago. I asked Todd last week, and he confirmed that yes, these videos are all online. You can go check them out on the Nadex webpage, or I believe YouTube as well. The 3 best times to make trades are 1 at session open, which is exactly what this is, news, and then after news retracement. Here's a session open into a previous level of sellers that you could have set something up. And again, this is a decent runner, right? I mean, so far we're down, what, 204, right? 204 from 9 o'clock till now. And actually, most of the move happened in the first, 2 hours, in the first hour. That's a lot of movement. You could be done for the day just based off of that trade. And that's why it's important to know where these areas are. Okay, this was a very easy area to figure out. But I am going to say I still think there are opportunities for this week to not only retrace this loss for today, but it only takes 1 or 2 headlines for us to have, put in a decent green day, and then just one kind of push. Maybe Powell does it. I don't know. I mean, Powell has the ability, but I still think 35,000 is on the plate. Like yet last week it was at 42.24. This week I really feel like this one, it has a valid attempt to get up there. There's so much news with non-farm and everything else. This is the week, right? This is the week to get up to 35,000. But right now, again, this was nothing but profit taking from a very strong European session, an uncharacteristic European session higher. And again, this is that parabolic retracement, parabolic move up, found a level at a session open, roll over, push back to the downside. And again, the way you play these is with a short duration call spreads. You can do it with knockouts as well, or the shorter duration binary contracts. All three of them work for session opens, particularly the immediate kind of step back in after holiday, right? The Tuesday after a Monday holiday, great push to the downside. Now, areas where we're going to watch out for, and again, we're kind of having issues here, right? We talked about this one as well as an area of interest, and that's what it ran into. I would say, we have a little bit of a confirmed level. I'll leave that down there. I'll steal this one right now. Just bring this across. We already know that we have a little bit of a test coming in right here around the 34,410 level. There is obviously some selling, and again, these were kind of the overnight levels on a holiday, and again, this was the European session open. I would assume we're going to have some problems down here at 34,500. An area, though, that I would be willing to kind of, get in there and maybe look for a potential bounce off of, though, is this 34,410. The reason why is because, again, here is a tested level, right? But originally it was formed back on the 27th, right around 2 o'clock in the afternoon. And I really like how, if you look at this, I really like how those wicks are formed, right? We had a wick here, and then we had a test in, and it goes higher and higher and higher and higher and higher, and then boom, it explodes off. And again, this was a prior level that we were looking for it to break anyway. And it did. It broke, came back, set that new level, and then punched higher. So I think right now, again, we stay negative. I think we start hiccuping or slowing down somewhere into this 34,500. I think some type of reentry to the top side is at 34,410. And again, it could be one of those scenarios where, again, we get over here and we look for the European Open. Whoops, I don't need a gigantic one. Right here, and change that to black. I have no idea why that did like a incredible Hulk size hand there. Right there. And again, that's the European Open. So that could be a probable target / rollover point for tomorrow. All right, so that is the indices. Let's roll into the currencies, right? So this is a funny one. So the Australian dollar, I mentioned it. I think we have a great trading opportunity tonight. This is one of those ones that it's a little bit of a trap, right? A little bit of a trap. Everybody knows if we focus on just this, you're like, I know what that is. It's a double top, right? Yeah, you could say that it was a double top, but it was also a level where we had buyers stepping in and stabilizing. So had you taken this one when it broke through the neck right here, right? Because again, you guys know this strategy, right? You measure this up, you go back to the neck, and again, the neck would be more or less the bottom of this, right? The second it broke through, and you should have targets down here, right? Oh, and it breaks, it should go all the way down. The second you would have sold playing in the double top, what did it do? Boom, it went right back up to that same level. So right now, it's kind of squished in between an area of buyers and sellers. In actuality, this we come back to the basing level over here, right there. You guys can see exactly what that bounced off of. There, and there. All right, so it's been kind of one of those ones that's flirting back and forth between two different well-defined levels. I mean, it's a bounce of about 34 pips. I would say either of those is probably valid. I really like the 77.90 and the 76.86. those are better areas for news releases. You can see it's coming in right here. Could it get to either of those two? I mean, it can, but it needs to do 33 pips in the next, what, 9 hours? Could it do that? Sure, it could, but it's got to definitely punch through. Even though it's got 3, it's going to go up. And I like that for a short. It may not hit it today. I don't know. Maybe it comes down and tonight's news is what drives it up. And then again, that could be a rollover in the overnight. I do like the 76.86. And again, it's got a ways to go. I mean, it would have to drop 74 pips. Not very likely unless there's some type of blockbuster news. This would be like something along the lines of that they're going to call an emergency meeting to talk about inflation. That's not the headline. I haven't seen that headline, but that's the type of quality headline that you would need to see for it to drop that much before the news tonight. That's a lot. Could tonight's news, I mean, if there, if there's a report with it, could it drive it that far down? It could, right? But remember, this 77.90 and the 76.86 are kind of extreme levels. So right now, we're dealing more with these kind of lower levels. And again, there's even a little bit of a level down here. So kind of a hard one. I would say I'm probably more bearish at this point, just to kind of keep this in with a dollar strength moving forward. The PMI data has looked good. So, I'd say that this is probably due to roll back down in base. And again, one way we could play this is if you want to do a Harry Potter, look for this to kind of punch through, punch back up, and then again, kick this one back to the downside for an eventual target down here at 76.86. I think that is probably kind of the best scenario right now. And again, if you can coincide that with the news tonight, I think that's decent. And don't forget, even if tonight, maybe tonight's news just kind of helps it grind up higher or lower, keep these on your radar. They don't go anywhere, right? Tomorrow, we have this retail sales number, which is definitely a month-over-month retail sales number has the ability to be a great mover. So this may not be a trade for tonight. Again, maybe this is a trade for tomorrow if we continue to push up based off of tonight's news to one of those two levels. All right. Now, Aussie yen is also chopping back and forth, and this one kind of the same thing. I mean, these are the levels that we had from last week. You guys can see that if we continue to move this across, we had a level here on the 27th. We hit it last week, pushed down, and kind of just have now stabilized and really kind of gotten stuck. We had 2 levels up top, actually 3 levels up top that we were looking for. I think any 3 of these levels could be used for shorts with news tonight. Sitting at any of these 3, right? 85.09, 85.19, and 85.36. And again, these are, I want to be in that level before the news happens, right? You don't want to get into the level and then wait for the news and then try to trade it. If price is artificially pushed into it before the news, that tends to be a telltale sign. Now, downside, you can see that we have a great level down south, but we are so far from that at this point. I think levels that we look for in this one are, unfortunately, all these wicks down make a lot of this analysis harder. And if you look over here, we're in the blue range right now. I guess I could extend that across. Let's unlock that and keep that across just to kind of keep consistent with it. There you go. So you can see we're kind of in that no man's land. So we're really looking for this one to go up a bit more. And the Aussie dollar, Aussie yen, if they both go up a bit higher, again, that's where we're getting that kind of roll over the downside. So I do like this more for a short. And again, that would actually be some yen strength coming back in. Downside, finding something in here to go long off of, a little bit harder. I mean, there's a small level here, but it's been hit 2 or 3 times. We take the lower level here again, hit, and this is a 3rd hit. So there's not many high quality levels down there. I would say probably over into this range. Again, we don't need this one. But I'd say probably down here into the 84.33, but it's got to move, 60, 70 pips to get down to that level. I mean, again, if it does it today, that's kind of more of a retracement. And again, maybe we use that. We don't need this one anymore. We're going to pull it here. Maybe we use this as far as a profit target to the downside, right? If we have pretty bad news, look for a push to the down. And again, that could be a potential, this could be a potential reversal, right? If we have extremely bad Australian news that punches it down into that level, look for a bounce and look for a rollover back up top. Okay. Euro pound. So here's euro pound. Again, this is a tested level we had from the past. Last week we talked about being high, getting this one up, pushing for here. We talked about a lower level, and again, this one we were expecting it to break, and again, once it based in here, it went lower. We were looking for a Harry Potter trade south. Unfortunately, this hit kind of in the afternoon late, and again, it's been a level that is obviously base, came low, came high, bounced off it again, bounced and based off of it again. kind of gave us the pullback. It's one of those levels that it's been a pretty popular level at this point. We're gonna keep this. Actually, I don't need it right now. I would say right now, again, there's a small level in the 30-minute. We've pushed kind of like literally to the brink. So, taking the short up top, I would say, it's okay. It's over the 3-to-1. It is sitting. Yeah, it would be at a 5-to-1. The 3-to-1 is sitting right there. Okay, but it's not a very big level. It's one of those situations where it's we're talking about a 4 or 5 pip range here. It's not really anything super crazy. So, for me, I actually like this one. If we can break through, I think if we can get a breakthrough of 86.16, I think that is better. I do like that. That kind of falls more into my pound strength type belief right now. And again, a lot of this has happened on a holiday, so a lot happens, right? A lot happens. But I think this is it's more lined up for me to take this one short. Um, I do definitely feel that the UK is much farther ahead, and especially with the PMI numbers today. It's like the top. I think they said it's the highest increase or sustained increase in like 30 years or something like that. I had it up top. Hold on. Where is it? Yeah, the quickest pace in nearly 3 decades in survey history, right? That market conditions in the manufacturing sector has improved at an unprecedented rate in May, right? So I'm still in Team UK, which would bring this one back to the downside. It's just getting this one stabilized. And again, if you want to wait till the European Open, again, that's where most of this comes from. It's sitting right there. And again, you see all this news right there. That's kind of what you want to look for. All right, as far as good news entries. Now Euro yen is basically just sideways, right? It pushed higher. We were looking for that push, right? We were talking about it going up. It didn't slow down. It came back and it retraced right here. You guys can see the touch there on the 28th. And since that time, it's really been consolidated in. And by consolidated, 46 pips is okay, but hasn't really given us any great entries. I would say that this one is also more kind of set up for a short, but there's just so many wicks in here. I would say this is more wick than body, and it's not really anything clean, nor is it really explosive as far as areas that I would want to take. And again, we talk about maybe we take the break of this level, maybe we adjust it slightly. We can come up to kind of in here when we break it, and then we look for kind of a retracement of this big explosion. But right now, unfortunately, this one is just, whoops. Unfortunately, right now, there's just not a whole lot in this one that we can really grab onto. Again, I think eventual profit targets down here, but I really like to capture kind of this large explosion in price. We got about, I don't know, 20, 23 pips to kind of get down there. Yeah, it could definitely move, right? It could definitely move. But I wouldn't say that this is a super strong mover. And again, maybe this is this could be a level to watch out for later in the week. Right here, right? Why? Again, ECB president is speaking. I don't think it's the same commission. Yeah, it's the same one. Talking about climate change. So could it give us a headline? Maybe, right? Maybe. We'll see, right? It's all right. I'm not going to tell you right now that that's going to be the trade of the week. I think the Australia still has the Aussie still has it. But again, I'd keep set yourself an alert 133.60 if we get a break. Again, look for potential short to the downside of 132.96. It's only about 60 pips, but could be a decent trade. Now, euro dollar, I think, is more at risk. Again, we had this last week. Let's clean these up. We had multiple breaks. We had this. We don't need this anymore. We don't need that level. Let's pull this. Yeah, we'll pull this across. We're gonna focus on this level right here. Now you can see that there's a small level, and again, we had basing here, a pullback, and a test of that level. That's actually what it went off of this morning, but I wouldn't say that it was really clear. I mean, here's the European Open. It dropped to 430, came right back up, kind of tested it, 530, 830 came down, and rallied back up again, and then the 1030 reversal is what turned. Had it hit all the way up here at 122.59, then yeah, that's a decent reversal. This one kind of got a little bit out ahead, unfortunately, and that happens. There's not a whole lot we can do about it. On a 4-hour basis on this one, though, let's kind of adjust the curve. I wanted to bring it forward. Bring these out. there. See on a 2-hour. Yeah, we're still gonna keep that one. Trying to see if we could pull like a hidden line out for you guys, but unfortunately, it doesn't look like that's going to be the case. I would say kind of intraday curve wise right now, and again, I think this is definitely at risk for getting broken. I think we focus on kind of this level here, right? But I think it's one that could be broken. So we're getting the double pink up top. That level comes in at approximately 122.60. How far are we from it right now? 30 pips. I like it for a short, but I just feel like if we're outside of European session hours, I feel like this one is not necessarily going to hold. I think it'll grind through with more of a US dollar kind of influence. And you can see that we kind of have top and bottom right here. Either way, we could kind of shorten it. I think both of those levels are decent, particularly for a European Open. Again, we have a lot of news packed. We have news coming in right now, but we have a lot of news packed in tomorrow morning. So, could there be a potential long off this level? There could be. European Open is right there, right? So again, if price is able to force its way down, it's kind of a run though. It's about 90 pips. There'd have to be a big data to kind of help us with that. I think at this point, the most likely scenario is probably the other way around. It's probably finding buyers here, and it's most likely most likely this scenario. 3 right there. I keep trying to shrink it, and I keep messing it up. Right there. I think that's a higher scenario at this point. We're much closer. It's only 30. And then you bring it right back down into this level and take your profit around 121.92. Okay. Yeah. There's one will be a mover later in the week, unfortunately. All right. So pound. So pound is really coming back again. There's been a number of opportunities, and this is on a higher time frame. You can see again, we obviously knew that we had buyers in, and it's hit a few different times here, right? Actually, should be on the bottom right there. And again, base, touch here, touch here. This was hit number 3, and this one was at the European Open. Right there. Okay. And it pushed back down. And again, last week we talked about 155 being the target. It drove all the way up to 156. And now we're back down to 155 all over again. And if you're looking at this and you wanted to set up some type of a curve scenario, you can say that, hey, listen, this has definitely been kind of a, big areas. We know we have buyers here, but if we start to break through this, we got a pretty nice run down to 154 territory. So, I'm not necessarily the biggest shorter of the pound right now. I do feel that the pound has more room to go higher, particularly when they start doing some interest rate hikes. I feel like this one is just going to absolutely just take off and explode higher. It's not there yet, but again, whenever you see a big push up like this, you got to expect some type of price returning back to the norm. And again, this was great European news, or great pound news. And again, it drove it higher. Now we're looking for the reversal and the profit taking back to the downside. So we're in no man's land, but I think 155 is important. You can see it's not a coincidence that it literally hit and bounced right off of 155. Very large psychological level, ending in a 5 or double zeros is always big. You combine those two, again, quite a large target. You can see the same scenario happen here. It went up, it pulled back, and again, impulse, correction, impulse. Now we have kind of this impulse correction, impulse correction, impulse correction. I would expect the impulse to continue to drop lower. And again, my next overall profit level would be sitting right here. Right about there. Okay. 155.26. Again, that's the last time buyer stepped in. Right there. Okay. All right, pound dollar. Pound dollars is similar. And again, this one came back up to the extreme. It ended up punching a little bit higher. And again, this is a European Open as well. You could have taken this in the overnight, boxed it off. And again, European session open right there. Right there, actually, where the peak is, where it touched it. So again, we'll remove this since it overlaps. Right now, I would say this one is pushing, but it does have a level here that was tested. I think if we hold firm in here, and again, we can just move this one forward. We'll move it to there, adjust it across, and then we'll lock it so we can see it. Let's see, this one went up. Let's pull those off. We don't need this. We can move that. This one based. It bounced there. That's fine. We'll just keep it clean for there. I would say this is a kind of a hidden level to watch out for right there. And again, I like the base. Strong push, one candle base on the 30, and then pushed up, came back, retested it, and then launched itself off. So, I think right now 141.46 is the level to watch out for. Could it be a bounce point? Sure, it absolutely could be. It was a decent run now. It does have a double bottom on wicks, which I don't necessarily love, but a push down, a pull back up, a base and then higher, then we take off. If it comes down and start bases, look for this one to collapse, in which case, then again, our next time that we're buying is 141 flat. Okay. As far as going higher from here, no, not really. And like I said, if we break through, I wouldn't be surprised if this one comes all the way back up. But this was such a big push; it was right at a session open. So again, keep your eyes on 142.40 as well. Okay. Just move this across, make it easy for tomorrow. Okay. Dollar CAD. So dollar CAD's returning back up. So dollar CAD, we had a level here, and I'll push this one on. You can see that it stabilized itself, and again, 1, 2, 3. Then it based. Again, we're expecting this one to fail, right? So number 4 came through and based. Yep, it's going to fail, and then boom, crash back down again. And right at 10:30 in the morning is where a reversal was for the morning. And again, not really a whole lot of news in there. We were really looking for this to come all the way down to 1983. It got there about 20 pips. We missed the reversal by, and not surprising. Again, holiday Monday messes with the dollar. We had a level of buyers. It hit for the 3rd time at the European Open this morning. Again, hit number 4 is what we expected to hit as soon as the base was the telltale sign. So was there a short in here? Yeah, it dropped about 25 pips from the when it finally broke through, but not the ideal situation. Like I said, we're kind of in extreme. We're waiting for this one to come farther lower. And I do think this one continues to, again, once we find the sellers, there's some sellers stepping in right here as well as some sellers in this level. At an extreme level, if we could rally all the way up there, I love the 129.30. Right, oops. 129.32. Love that level, but we got quite a bit of ways to go until we can really, kind of get up to that one, right? But I am overall short this pair. I do think this one comes back lower. And again, remember 1983. I'm sorry. I don't know why I keep saying 1983. 1981, right? I guess the bottom of this is 1983. Larger time frame level. This is based off of 4 hours and dailies. So again, waiting for much more of a kind of a target down here to kind of suck in and then provide maybe a decent rollover, and then we look to go long. But right now, I'm going to stay, short the dollar CAD. Dollar Swiss. So dollar Swiss, look at this. You can see that we had quite a lot of buyers in here. And again, we touched, and then just boom, got hammered down. European session started right here. Man, the dog is hearing all kinds of stuff. I don't know. Do any of you guys have right there is the European Open. Not necessarily the best entry, right? And then the US Open started and we were already down here. I don't know. Do any of you guys have animals? Like it's like a diesel truck outside with the cicadas right now. It's driving my dog. Like she's just batty, right? She's been acting weird for like 2 weeks now. But we didn't have any cicadas all weekend, and all of a sudden, bam, sun came out, stopped raining, and now it's like there's like 3 diesel trucks sitting outside of my house with the cicada noises. I don't know if it's all animals or just I have a weird animal. Who knows? As far as dollar Swiss goes, I think this 89.33 level is good. We are only sitting right now about 27 pips. I think once this finds some sellers, if it doesn't rally all back up again, and if it does rally up again, I think there's another short opportunity in here. There is some Swiss news later on this week. You can see right here that, let's see. What are the policies currently? It's the Green Swan Global Conference. Man, I'm all for saving the planet, but I need you guys to have just like normal news. Give me like real news, not like, I'm going to do the opening for the Swiss. Yeah, I don't know. I would say if we get back up in this range, there's probably some sellers sitting there, although this is 3 as well. There's probably a level in there, but I got to see what time we hit. This would be one of those ones that if we can coincide this with, whoops, right here. If we can get that for European Open, I could consider it. Like I said, this is hitting. Is this the ideal reversal level? No. Is it a reversal level? Yes. Yeah, I think I wait till it comes farther down. I think right now we focus on these two levels, 89.32 and again 90.41. And with a minor potential chance, depending on what time we hit, over here at 88.91. Okay. My cat said that too. Yeah, Lindsay, it's insane. I just can't like. Yeah, it's the cat doesn't seem to be affected. She doesn't care, but the dog, I'm like, what are you doing? Why are you being so weird? The cat has been very touchy feely. Yeah, I will say that. Who knows? All right, so as you can see, the 27th last week, we finally broke through some of those levels. Now, interesting, we did have a push, and we were talking about the reason why this is green and not red for that level is because we were looking for a break to go higher, and it did. It went up, came back down, and you can see it stabilized and did the same exact thing right to the downside. There was the entry to go long, and had we used that same level of stabilization, you could have used this level right here and said, hey, wait a second, look at this. Stabilized, touched, bounced, came through, and then came up and touched it and continued to push lower. So I would say right now the dollar yen has been very difficult to play because there's so many factors involved. U.S. interest rates, digital currencies, Japan locking down again till June 15th. So there's a lot of factors that have made this one very difficult to trade. Right now, it's moved down 0.08%. You can see in 24 hours, it's moved a total of 6 pips. So it does look like this one has been great for trading opportunity. I mean, it looks like it's like this, right? But in reality, it's kind of more been like this. It's been rather weak. So there's been some small minor things in there. And again, if you use the same level, again, bracket right there. These levels are actually quite tiny. We're talking about, I guess it's like 7. So, I mean, it was an all right trade for this morning. Here's again, this is yesterday morning's European Open, right there at 3. So right there. Could you have taken it yesterday? Sure. I mean, today, European Session Open is here. And then again, here's the U.S. Open here. Pulled it right back down. So really no true trend in this one. And, funny enough, if you want to bring this across, you can see what it's bouncing off of is that old level at 90.26. Don't really have a great setup today on a Tuesday for this one. I think wait for this one later in the week. Thursday, Friday, I think we will probably have something. And again, if you want to use some of these extremes, you could. Again, at this point, jack this one up higher, bring it over here and box off the top of this. Let me see. That's going to be a hard one because we just have wicks back there. So, yeah, I would say that this is probably the new level up top, kind of the new extreme level. Like I said, it's quite far right now. I mean, we're talking about 70 pips. This one has a daily ATR of what? 55. So unfortunately, not really the biggest mover, and that's about 2 or 3 days worth of movement straight to the top side with no pullbacks. Is that I think we see where we are in the next couple of days, and then maybe take the appropriate action. But unfortunately, nothing here. Let's go across and look at oil. So there's oil. Earlier this morning, we covered this one in the Nadex presentation. We waited for, we assumed that this one was going to break through. It had been hit a few different times at 76. It did. It went higher. Ideally, I mentioned 69.60 was the area that I liked, but we had such movement in this one from the overnight, actually really from yesterday, actually from last week, I guess. The European Open yesterday was kind of this little bounce here. We talked about taking profit, and it did. I mean, here's where the UK Open started, right here. Actually, this one's off. It's right there. We're at the exact same spot. So all of the push up from the European session has now been pushed right back down again, and oil's in the same exact spot. So, most of the movement came from yesterday. I would say, with the inventory report being pushed back to Thursday this week, this is the OPEC kind of news, right? If you don't know what I'm talking about, OPEC says that they recommend keeping the hikes in January, basically reducing, getting more supply out there, right? Well, talk about manipulating the U.S. trader. What happened in the overnight? Let's raise price up. Let's raise price up. Let's raise price up. Let's raise price up. All of a sudden, hey, we're going to keep those hikes. We're going to produce more oil. And then boom, the price comes back down again. So, this is one of those great lessons. When you want to sell something, when you're expecting bad news, what do? Do you let the price come down so you can sell it down here when it's cheap? No. What you do is you jack the price up and then you sell it up here where it's high, and then you buy it back down here when it's much, much cheaper. Again, just standard kind of, not market manipulation necessarily, but again, you buy low, sell high. When you need to short something, you sell high first, and then you buy it back at a lower price. At the end of the day, it really hasn't changed price. It's easy, all the push up in the European session was completely rewritten in the first hour of the US session. I'd expect it gets a bit slower right now. Actually, I guess let me mark that off. Let me bring this back up to the 30 minutes. We got to stay consistent with this. 3 o'clock is here till 8:30 is there. Turn that blue, and then we have to do it the other way till, I guess, till 2:30. Whoops, till 2:30, right there, and that one turns orange. There we go. So yeah, so how about that for an actual, big day? And well, I didn't do one for Friday, but we can do it for Friday at another time. Okay. Yeah, all the way up. U.S. trader came in, all the way back down. So yeah, completely wiped out. This one is still off a bit. I guess it's not bad. Right now, I would say we need to wait for this to go higher. I would really, 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 really like, so if anybody has some inside people, if you guys want to talk to them, be like, hey, listen, we need to jack the price up and then have the oil inventory report over here for later in the week. I'm all over that. I think that's a great level. I would love for that to happen. So if you can have your people call my people, let's make it so. But no, in all seriousness, 69.70 is a level that we're waiting for it to come up to. It is farther back. It is a higher time frame level that was revised back down again. So I do like it up there. I will tell you, when we start getting up that 69.70, 70 is going to be a psychological figure that a lot of people talk about. Being at 68.20 now, it may seem like ways away, but the daily ATR right now for this one, I think is $1.80, right? $1.80 is the ATR. That's what the average is right now in one day. Again, that 1 day's worth of movement is right there. There's your dollar. There's your ATR right now. So if we flatline, don't do anything today, we are 1 day away from oil being able to pop up. And remember, the average 2 range is one of those things that it takes the average of the last number of days of what the movement is. That's what can happen. We're 1 day away from that. And again, with no oil inventory report tomorrow, could we rally back up again for a bad oil inventory report? Sure. Could we baseline and do absolutely nothing for a day? Absolutely. And then that could be a launching point. If we pull back down looking for buyers down here, could the oil inventory report drive us all the way up to the 69.70? Absolutely. And then that would be a wonderful kind of rollover if we were able to catch this one after the oil inventory report. All right. Now gold. And gold's kind of popping back and forth. 1910 was something we were looking for last week. You can see we hit it. We bounced again, and again in the European session. European market opened here, and we really pushed gold down. It came back up again, and then the U.S. trader stepped in and pushed it down. The PMI numbers have been great, but really the Fed's lack of really having, wanting to do anything on a substantial level has really hindered this one from really going much, much farther. I think 1880 is a level that, if we can get down there later in the week, I think that's a valid area. We talked about, this one opening up here, and it didn't. It ended up taking it over here. And again, this was a U.S. trade open on the 28th. Right now, it's kind of probably the same thing. I mean, for gold right now, keep it marked off. Gold right now, we're looking for, if we can push down to here for a European session open. But, really, I would say right now I would say all eyes should be looking for this one to go higher. But we need something from the Fed, right? We need something. They're blinders saying, nah, we see inflation. We're cool with it. We want it to be higher than expected. We're going to let it go for an extended period of time. And then in the next line, they said, but everything we see right now is going to disappear. It's not really showing us that there's inflation and there's anything that they're going to necessarily do about it right now. So, I would say overall, I think we need to stay bullish focused on gold. I do think that we've seen a lot more inflation than what they would like to have. They are not acknowledging that it's real inflation, but man, the second that they acknowledge that this is real, like everybody else is talking about, I do think this one takes off. And again, we have one small level here that we bounced off of, and that was a 1030 reversal this morning. But at this point, I think 1882 and maybe even a little bit lower if we can get a down day. There's a couple different levels I'd be interested in buying right now. And again, not so much selling. I'd like this. I'm typically, historically, I am more of a gold bear, but I think at this point in time, with everything we've seen, I think these guys are ready to. I think they're ready to explode. Now silver this morning we talked about it. Now this is crazy. Look at this. European session down 630. We drove all the way up, and as soon as the U.S. trader stepped in, right there, whoops, it dropped. Now, if you attended the session earlier today, and again, I'll stretch this out so you can see it. I was talking about profit taking, that really since yesterday, this thing has just gone high. We've gone from the green level all the way up. We pulled back. We punched higher. And again, we knew we were going to have some problems. A break of 28.79. We were looking for this to go higher, and it pulled down. And then we drove again, and we were looking for 28.64. We got up to 28.56. I missed it by 9 cents. And then it collapsed all the way back down to this level, back down here, breaking through the 27 mark. So it was about a 60-cent mover. That's a big mover, right? That's a big move in a short period of time, and it was just really the U.S. trader stepping in. Remember, when not all markets are open, it's easier to manipulate the market. There's a lot of manipulation there. We're solely back in the middle again, and again, here's where the European session started. Actually, this was last night. This is where the push kind of started. Here's the European session. People saw it and got sucked in, and it dropped. So unfortunately on this one, we wanted to go a bit more. We missed the entry. There's nothing we can do about it. Again, that's why got to be aware of session opens, news releases, and retracements. And unfortunately, the session open got us before we got in. And again, this is the one problem with being an if this, then that trader. If it got to 28.64, we wanted in. We were looking for it to go short. It just wasn't all the way there. And it did the move that we wanted. It just wasn't as high as we would have liked it. So that's kind of sometimes, again, depending on your individual risk tolerance, sometimes you take these, sometimes you don't, right? And again, had you gotten short at the session open because we were calling for a short, you had a great day. If you're waiting and you were more the conservative, waiting for the 28.64, it didn't work for us today. But it is what it is. I think 28.64 is still something we keep on. 27.19 is something we still watch out for. Right now, we are in the blue no man's land. Not much we can do with it right now. Again, look for those big news releases. Inflation later in the week. Any of the ADP non-farm numbers will also be good. And again, I think silver right now is probably the way to play this more as we see more and more people roll out of Bitcoin. You can see that Bitcoin, Ethereum all down. Dogecoin is also down. The more and more negative we hear about this, I think the more that rolls over into silver, and silver becomes the more volatile of the two metals. Like I said, Robert Kiyosaki, if you know who he is, Rich Dad Poor Dad, he said he thinks it's great that Bitcoin is coming back down again. He's not interested, though, in getting in this until it hits 27,000. So he called his shot coming down to 27,000. And again, there'll be some people that wait to jump on board what he says. I don't necessarily agree with that. I'm not a big crypto trader, but as people are pulling it out of Bitcoin as it gets red, they are going to look for something. I think silver is where they're going to put that. So I think, again, just like with gold, I think silver, we need to find great buying opportunities and look for this to go higher. All right. So with that said, that is it for today. We covered a lot. It's a couple minutes past. And again, no harm, no foul on that one, a couple minutes late. Please make sure you guys mark off next week, Tuesday at June 8th, crazy, at 12 p.m. Eastern. And if you guys are not already attending, every single morning we are on from 8:45 to 9 live to give you guys the hottest opportunities of the day. Make sure you catch that. All you got to do is there's nothing to sign up for. Go to Nadex's YouTube page, click the subscribe button, and then hit the notifications icon. So whenever we go live, you are getting it to your desktop or phone, so you guys don't miss anything. You can watch the replays of it, but again, it's timely data, a day or two into it. There's not really much point. It's really what's hot for the day. If you have any questions for anything I said, email me at support@keeptradingsimple.com. Thank you so much for joining us. And with that said, I'm out of here, and I will catch you guys tomorrow morning.